Hi, today we're going to talk about how to use the ascending triangle to find monster breakout moves in stocks. So as you know, the ascending triangle looks like this, where the stock goes up, then corrects, moves up to about the same height, corrects, make a higher low, moves up, make a high about the same level, and then corrects to make a higher low, and eventually breaks out. This is exactly what it looks like. You draw a line here, horizontal, and an uptrend line to connect. So what you usually do with a ascending triangle is you buy the breakouts here, put a stop loss here or here or here, depending on how aggressive you are. So we have a stock chart of the NVIDIA stock chart here. Just look at how the stock went from about 500 to, well, about 800 in just a matter of a couple of weeks. Okay, about maybe 6 to 7 weeks, which is quite a fast gain. Okay, first of all, let's look at the criteria. Number one, there must be an ascending triangle. Okay, there must be a chart pattern. If there's no chart pattern available, there's no trade. Okay, secondly, the stock must be above the rising 20 MA during breakout. Okay, we're going to look at the 20 MA. The 20 MA is the red line here. So during breakout, the stock must be above the rising 20 MA. And the third criteria is stocks should be above the rising 200 MA. So this yellow line is the 200 MA. Now you might want to ask why we want to have this criteria. First of all, the 20 MA shows the short-term trend of the stock. So if it's rising, that means the stock is bullish in the short term. And we want the stock to be above this rising 200 MA because we want the stock to be long-term bullish as well. So whether you look at it as short-term and long-term, we want it to be bullish bias. So we have NVIDIA here trading sideways, and eventually it makes this ascending triangle pattern, and then it breaks out above these highs. So a trader can buy this breakout, okay, and put a stop loss here. Okay, if he is aggressive, or if you are less aggressive, you can put the stop loss here. Okay, so notice how the stock is above the rising 20 MA and 200 MA, and see what a nice move it did. You can use the 20 MA as a take profit point. Stock drops below the 20 MA, you take some profits, and the next time it drops below the 20 MA, you take the profit. Alright, let's zoom in a bit to see what happens to the stock before it rises up. So this is a zoom in of it. High lows, higher lows, same highs, breakout. You can buy the breakout, okay, and watch the rising 200 MA. Okay, this is what it looks like, the setup. And sometimes you can go to the weekly chart. This is a weekly chart of NVIDIA. If it's a bonus, right? If the stock is above the rising weekly 20 MA, this red line is the rising weekly 20 MA. The breakout happens here. And if the stock is also above the rising weekly 50 MA, which is this red line, is rising, okay, this is a bonus, and it hints to more bullish moves in the weekly chart. So here we have a weekly bottoming tail as well, which points to the stock rejecting to go lower, and you can buy the breakout, okay, and ride it higher. So I hope this short lesson has opened your eyes to the way to spot monster moves in the stock. And if you like this lesson, please smash the like button and subscribe to my channel, and I'll see you in the next one.